Welcome investors! Today we'll be talking about three things. 1. My recent shopping spree on Disney stock. 2. Rising interest rates. And 3. Possible invasion of Russia into the Ukraine. So if you're interested, keep watching. So topic number 1, my recent shopping spree. On Friday, we had announcement that the Netflix was showing fourth-quarter subscribers decline and operating profit margin decline as well. The main reason for that company cited it was the increase in competition and strong US dollar. Immediately, we had the stock of the Netflix going down 24% and another streaming companies going down as well. Disney, Hulu, HBO, Peacock, they all went down because of the negative report coming from Netflix. Within those companies is Disney, my favorite entertainment giant company. Disney went down 7% because of unfavorable Netflix report. Let's take a look at some important numbers at Disney. Company market cap is $250 billion. Year-over-year revenue is increased by 26%. Net income 122%. Diluted earning per share 122%. Net profit margin 117% increase. Disney owns also Marvel Studio, which includes Iron Man, the Avengers, Captain America, Thor, and many more. But the real trophy is Star Wars franchise, which is the fifth, the most successful franchise of all time. So when I heard the news on Friday that the Disney is down 7% because of the Netflix, immediately I came to the conclusion that this news is true, accurate, but useless for long-term performance of Disney. I definitely prefer Disney than Netflix because Disney is a well-diversified company. I opened my wallet and went on the small shopping spree on Friday, January 22nd. And today as well, on January 24, Monday, I also decided to go on small shopping spree. On Friday, I purchased, I think, 40 shares for around $137. And today, I think it's like around 20 shares for around $130. I'm gonna successively day after day watch the market because we have special circumstances and events going on around the world, and I'm hoping that the price will go down and I will gradually buy more and more shares of Disney, because I decided to buy this company because I deeply believe that this is a great long-term place where I can store my money. Disney is the company which is very well diversified. There's not only a Marvel Studio and movies, but they also own the parks, they also own the resorts, they also own the cruises. So this company is destined for success in the future. And as of right now, I'm buying stable stocks which will last for many years in my portfolio. I'm for now done with buying risky stocks, gold, silver, uranium, because my portfolio already has a lot of them. So I think that the Disney is a great addition to my portfolio. I started buying Disney 2 years ago and I paid $86 per share. Right now the price is like I said, around 137. Today was a true roller coaster because price went down from 137 to 129 and then came back to 100, I believe 37. Correct me if I'm wrong. Doesn't matter, that's the details. What's important is the future, and the future looks kind of grim for the stock market, but it is a great time to buy. And right now I want to talk about the second topic, which I said about the rising interest rates. So as everybody knows, the inflation speeds up in the fastest pace since 40 years in US, and Fed suddenly woke up and they decided to do something about this. What they can do? They can do only one thing. They can only increase the short-term interest rates, so the cost of borrowing is much higher, and there is going to be a less borrowing, and in this way they want to kind of temper the inflation. How this is gonna work, we will see. There's such a huge amount of money pumped into the system by the government that we don't know how the economy is going to act. They are planning to do 4 times increasing the interest rates during 2022. I believe 2 times it's going to be 25 points, and 2 times is going to be 50 basis points. How this is gonna look, we will see. Some of the analysts predict that there is gonna be more increases in interest rates depending on the inflation. From my perspective, what I know that the Fed, by increasing the interest rates, is always a good catalyst for causing the market to go down. And when market goes down, then I wake up from sleeping, and when I see the days like Friday, like today, when the market is down, this kind of wakes me up. I'm slowly opening my wallet and start shopping. So I'm gonna wait during all this year and wait for the times when we have market going down. I'm gonna be watching what the Fed is gonna be doing, and if the Fed is going to be very aggressive, they might put the stock market really down into the depression, into the free fall, like it was in 2020 in March after the news about the virus. If this happens, I'm gonna put all my savings which I have on the side allocated for the stock market. It's going to probably gonna be a Disney, Huntington Ingalls Industries. It's gonna be probably General Dynamics, Waste Management, some of the companies which I already own, and some of the new companies which I mentioned to you during past couple videos, mostly from defense industry. Why defense industry? So we are coming here to the third topic which I'm going to talk about, which is possible invasion of Ukraine. Defense industry. Unfortunately, we live in the times when there is turmoil, and freedom is not free. You can see right here, this is a sticker which I have on my car. This is to show respect to people who gave their life for my motherland, Poland, for my second motherland, which is US. Many people died, and I just want to be conscious that I want to pay respect to those people. That's why I have this sticker on my car. Anyway, sorry for kind of going off the topic right now. Let's come back to the possible invasion of Ukraine. How the stock market is going to react. I'm not going to talk about this, if this is gonna happen or if it's not gonna happen. Let's assume that it will happen. If this will happen, the immediate response of the stock market probably is not going to be a free fall. Why I think like this? If you take a look at the data, how the stock market reacted in 1939 when World War II broke out, there was no immediate downturn in the stock market. Absolutely not. stock market during World War II bottomed in 1942 when the Allies were losing some battles on the Pacific, when the Germans, Italians, and Japanese were winning, and this looked like they are on the winning streak until 1942. 1942, when the Allies started slowly winning more battles, stock market started to recover, starting to go up. But until 1942, where there was a bottom, stock market was slowly going down. But the initial September 1st invasion of Nazi Germany into Poland didn't cause the stock market to go down, actually. So if the invasion of the Russians happened into the Ukraine, it's not probably gonna happen, it's not going to cause the stock market to go down immediately. We will have to see what's going to happen, which side is going to be, I would say, winning. If we see that the Russians have upper hand and they took over the Ukraine, then probably stock market is going to go down. But if the Western countries, NATO, is going to be kind of pushing out the Russians, then I think that the stock market is going to be doing okay. Personally, I don't think that this will have a huge effect on the stock market because it is a localized conflict. And you might say, yeah, it can spread to Poland, it can spread to all surrounding countries which already mobilize all their armies. I don't think this is going to happen because Putin is a very calculated man. He has too much to lose. Besides that, he knows that right now the Ukrainian army is a different army than 5-6 years ago, when then was the time to actually invade the Ukraine, when the army was really poorly trained and didn't even have enough money to put the uniform for all the soldiers. Right now it looks completely different. There's 250,000 of the well-trained soldiers, and there is probably like another 500,000 in reserve. So I think that this is going to be something which President Biden called small incursion. I shouldn't maybe laugh, because it's not reason to laugh, because if they invade, there's gonna be probably a lot of innocent people dying. So absolutely no reason for laughing here. But speaking from the stock market perspective, I'm not really looking into this event as a major maker or breaker for the stock market. I'm looking more for this, what the Fed is going to be doing, and I'm looking more for the inflation, because this is a real danger. And this, on another side, will create opportunities. Like I said, Friday, Disney. Today, Disney. I'll see what's going to happen during next couple weeks. Like I said, defense contractors, they probably are gonna be doing really well, because all the conflicts are stimulating demand for this, whatever they are doing. But we will see. We will see. Meantime, let me know what are your thoughts about the stock market, about the recent situation, and when the recent situation are gonna take us. Maybe I'm wrong. Maybe I'm wrong about interest rates and predicting what's gonna happen in Ukraine. Please let me know. I would like to learn from you. I always appreciate all your comments. So, and like always, if you like this video, give me a thumbs up and share this video with your friends all over the social media. And if you didn't subscribe to my channel, Please subscribe for more videos which are coming in the future. Thank you so much for watching this short video. I appreciate your time. I hope you stay healthy, well, and have a great day.